Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 3rd, 2010. Well, folks, here we go again. The market intraday is neutral on the day. Again, we're looking at the Dow Jones Industrial Average down 25 points, NASDAQ up 9, S&P 500 flat on the day. So again, a mixed day on Wall Street. The market started out slightly higher, but again, that's following the big rally from yesterday. It just could not hold up. Overall, there's just too much negativity out there for the markets to have a follow-through day, it seems, and ultimately we're now standing basically flat on the day. The spiders are down a penny here, trading up into the resistance. Now, what key line is this? See this blue line? It worked as great support for this bounce right here. That would be known as gap fill. Gap fill at 110.30 to 110.35. It was a beautiful bounce off of that level as we came into it, and again, you can see the bounce all the way up to the next level, which was 110.80, and then once we came down and broke it finally, now we've retraced up into it, and now that's resistance on the upside. So remember, support when you're above it becomes resistance when you're below on these master levels of the intraday charts and on the daily charts, monthly charts, and every other chart like that. Couple other things, folks. Again, the major squeeze yesterday afternoon, we saw a squeeze because there was no major pullback in the last hour and a half of trading. That caused that last candle to squeeze higher. It took us right up into that same level, that 110.30 to 35 level, also known as the Great Wall of China, according to In the Money Stocks. Today we gapped slightly higher, had a push up. Where did we go? We went right to 111. And if you guys know the methodology of In the Money Stocks, this is key. The 111 level is called an even number play. And what do we look for there? If you pierce the even number, a major even number like 111 on the SPY, you expect a pullback. That pullback brings you back down below it, and it's a perfect shorting opportunity. The short was called out this morning at that level at 111.05. The high of the day, 111.06. So everyone who wanted that could have gotten filled beautifully. And then look at the drop in the market from that point. Drop straight down, even number play working out perfectly, and it takes you right to that gap fill. At that gap fill, it was announced to be a long play, and again, this is intraday stock chat stuff, but again, the same methodology holds true for swing trades and day trades alike. And right here's your long play. You get the bounce. Where do you go? Right back to that blue line. That's where you sell it. Then the market comes down again, hits that level again, small bounce, and then reverses to the downside, breaks down, and the buying opportunity then becomes this orange trend line and the 50 moving average. Why? Because this consolidation is telling you that it's creating support. All right, again, you have to know these levels, folks. This is very important methodology that will let you know where to go long and short every move in the market. So as you came down here, the long play right here, you could have waited for a pierce, touch the 50 moving average. You would have gotten the exact lows of the day. Market then, since then, has traded back up all the way to the blue line again. That's where you take profits. So you can see every major move in this market had a profitable attribute to it. There was always some angle there that you could have been either long or short, and you would have made money on every one based on the methodology, and that's the key, folks. Now, again, markets are turning slightly positive on the spiders. We're now breaking above this little bit of a line. Your next little minor resistance is going to be right here. You can see how the market stalled right here before breaking lower. That means you're going to have minor resistance at 110.55 on the SPY. If you get through that, you're going to go back to this blue line up here at 110.85. Those will be key little levels. And again, watch that very closely. If you get above that, look for a double top at 111.05 or so as well. So that's your analysis on the intraday chart of the spiders. There's some big stocks moving today. I want to discuss them as well. Overall, guys, we got jobless claims out this morning, ADP unemployment, the employment numbers on private sector. That came in a little worse than expected on both fronts, but overall, it wasn't anything major. I mean, in all fairness, the markets didn't really react significantly. It's been all about the euro and the dollar. And I want to just point something out here, guys. Take a look at the FXE. The FXE dropped tremendously. Major dump on the euro here from the opening start, and notice how the markets fell off that level. If you go back to the SPY, let's punch up that SPY here. Notice by 10 o'clock, that's when the markets topped. When did the euro top this morning and start to reverse? Let's take a look at the FXE. Same time frame. Here's 10 o'clock, and then once the market started to fall, why? Because the euro was collapsing. Euro collapsed here drastically, coming all the way back down, and that's exactly what happened. The euro was collapsing. The dollar was ripping higher. Here's the UUP chart, which is the dollar chart as well, and you can see right there, the dollar again ripping higher. Now, all of a sudden, the dollar over the last few candles has come off the highs, really even all the way from about back here, and you started to pull back. What has the market done? The market's begun to break higher. The dollar is the opposite of the markets. The euro should trade exactly with the markets. That's the way it's been going. That's the way you have to remember it, and that's the way it will be. All right? So keep that in mind, folks. I think it's very, very important to understand the relationships with the currencies that the market has right now. And again, if you continue to trade up, you can expect to move all the way possibly up to this 110.80 and then 111.05 level on the SPY. Now, Goldman Sachs today. Goldman's been a little weak all day, although has gotten a bit over the last 30 minutes to 1 hour. Goldman Sachs still down. Generally, if Goldman is weak, the markets will be weak. It's just the nature of the beast in that respect, folks, all right? So you need to understand that. Goldman Sachs is a good leading indicator for the markets. The fact that Goldman's flattish to slightly lower tells us the markets are probably not rallying too drastically today, all right? What else do we have here? Also, if you take a look at some of the other commodity plays, Exxonmobil is having a pretty good day, although had a much better day early on. Sold off drastically here. Look at that drop on Exxon. It rallied up to more than $1 higher, then sold off to go basically negative, and then has rebounded up 60 cents. Very wild swings on that Exxonmobil today. Chevron, not as likely. Now, again, folks, there's some news out here on the drillers. Shallow water drilling has been suspended as well. No new permits issued, and that's hurting stocks, not necessarily the Chevrons and the Exxons, but something like Hero, H-E-R-O, Hercules Offshore Drilling. That is a definite one to watch, all right? So keep that in mind, folks, and I do think that's a very, very important situation to keep in mind in respect to the overall market here and what is happening. So keep an eye on that for sure, guys, and we'll keep an eye on that and continue to update you tonight. But Hero, again, you can see it rolled over in a drastic way, getting a little bit of a bounce, and again, quite substantial. Really, if you look at this, it's truly amazing, the action that's going on in some of these plays. All right, now I'm just scanning through over here. I want to make sure we cover everything we need to, but yeah, quite something. In any case, folks, let me just scan through here. Hero, what a bounce. And again, you can trade that beautifully. Notice how it came down. It actually took down this pivot low. And if we go to the daily chart, you made new lows. And now it's rocketing back up. Huge bounce on Hero. And this is all coming through on different situational aspects of the announcement that's just being put through, as it doesn't seem as bad as it once was. And we saw that major dump and then the reversal here on Hero back to the positive side. Truly quite something. All right, what else do we have here? Let's go to the Goldman Sachs, JP Morgan. We'll touch on JP Morgan. JP Morgan is down a little bit on the day. Again, JP Morgan has come off the lows, though. You can see once the euro starts to rally back up, all of a sudden you see JP Morgan do the same. All of a sudden you see Goldman Sachs, you see Exxonmobil. All the key stocks are helping lift this market here. Apple Computer has been under some pressure, while Google's been very, very strong. Apple has risen. If you look at the daily chart of Apple here, take a look at that move. Very, very impressive move to the upside. Hasn't really gotten back to a double top, but if it did, that would be a shorting opportunity of a swing trade basis. But you can see, again, what a move up, and it's pulling back. Not surprising to see it stall out. Now, on the other side of the coin, Google was just off the lows on the candle, really the 52-week lows almost, and that's finally getting a nice reversal back to the upside, back above 500. So keep an eye on that, folks. We'll see how that plays out. Come join the Research Center. Tons of stuff, guys. Tons of plays. The profits continue to roll. We basically have a 90% success ratio on our calls. Profits galore for our members, and again, that will continue, we believe. It's been a great trading market. It will continue to be a great trading market. Understanding the technicals and the methodology of in the money stocks is very important. You learn it all. We teach, we guide, and we give you plays in the Research Center. We'll see you there. Take care. I'll be giving my 40-minute video this evening. Should be posted by about 6 o'clock tonight. Take care.